Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at an incredibly interesting chart pattern that no one seems to have picked up on yet, at least not those that I watch on the YouTube, and that is predicting a $91,000 target for Bitcoin. So it's something that we really need to pay attention to. I'm also going to have a look at three quotations which I shared with my private members in yesterday's video, which they found incredibly useful. So I'm going to share them with everybody here as well about this journey that we're on towards the end of this bull market and the qualities and the skills and the attributes required to try and get there. So I'll have a look at those three quotations. I'll also have a look at the Bitcoin mining industry and the bidding war that may be going on over the next few weeks and months. And as usual, I'll look at the wider information around Bitcoin to see exactly where Bitcoin is going over the coming weeks and months. So if that sounds interesting, then without further ado, you know exactly what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. Because as we know, it's mentally tough to be on this journey with the Bitcoin and the Bitcoin miners. And anything that helps us to focus our mind on this journey and to make it to the end, hopefully up here at the end of 2024 or during 2025, whenever that's going to be. We'll wait until the Brexit indicators tell us when to get off the Bitcoin train. But whenever it's going to be, we know that this is a very difficult journey and we need to just keep our focus on there. And I've picked up three very useful quotations just to focus the mind as part of my support during this journey that we're on. The first one I'm going to start off with is this one here. And please remember that with all of these quotations, although I'm trying to make it relevant and important within the crypto industry with Bitcoin and the Bitcoin miners, these quotations, for those of you with a wider interest in personal development, you will see that every single one of the quotations that I actually show here on my channel, you can apply it to every single aspect of your life. For instance, and I keep coming back to the wheel of life, every quotation that I show really has quite a lot of relevance and importance in all of these areas, in the area of your career, your finance, which is where we're at the moment, but also in your personal growth, your health and fitness, your family, your relationships, the social environment that you're in, and especially in this area, attitude. So please look at these quotations to see how you can apply it to all of these 9 areas. And for those of you who are of a spiritual nature like I am, you can also apply it to your spiritual aspect of your life as well. So the first quotation here by Steve Maraboli is that incredible change happens in your life when you decide to take control of what you do have power over instead of craving control over what you don't. It's very important. One of the things I find with a lot of people, they refer to their past with all the difficulties and the problems and the tragedies and issues and the challenges they've had over their past. But it's something you don't have any control over. It's gone. It's water under the bridge, whether we like it or not. But what you do have control over is what you learn from those experiences and turn those negatives into your positive so that you don't actually repeat in your future life what's happened in your past life. So that's one way of looking at this quotation. And from the viewpoint of where we are with the Bitcoin miners and Bitcoin, we have control over our emotions, our feelings, our mindset of how to get through from where we are here to the end of this bull market. We have control over how we feel, our emotions, how we deal with the prices coming down, how we deal with the corrections and seeing our portfolios come down. We've got no control over Bitcoin. We've got no control over how the price action is going to pan out over the next 6 to 12 months. But we do have control over the emotional side. So take control of that and learn how to deal with those setbacks, with the difficulties and the problems and the issues and the mountains that we have to climb along the way on this journey. The second quotation is this one here. It's very similar to the one by Jim Rohn, who says that success is not a destination. Success is what you attract by the person that you become. And this one by Vera Wang is that success isn't about the end result. This thing here, of course, that's a success in its own right. At some level, it opens up the doors where other doors would be closed. So that is a success. by having a lot more money. But the bigger success, the wider success that we can apply is that it's about what you learn along the way. This journey, it's always about this journey. What are you learning on this journey? What attributes are you acquiring? What qualities are you improving on? What skills are you getting? So it's all about that. It's that journey. It's all about perseverance and the patience that we need to get to the other side without making a stupid decision, without making emotional decisions along the way that will be harmful to the end result over here. And finally, this particular quote is incredibly important, and you can apply this just like the other two quotations on any aspect of your life, because what it's really saying is that whatever you do does make a difference. No matter what you do, every little thing that you do makes a difference. And it's really up to you to decide what kind of a difference you want to make. If you want to make a small difference, then that's your choice. If you want to make a big difference, that's also your choice. But be aware that anything that you do, in terms of positive or negative, will make a difference. And I always say to people, when you've got a choice of making a negative difference or a positive difference, why choose the negative? It only leads to a negative outcome, a negative result. It takes the same amount of time to make a negative difference as it does a positive difference. So why not decide the positive? And you never know, when you give out positive energy out into the universe does have an incredible habit of giving you a lot more than the positive energy that you've given out. You will get a lot more positivity back. So there you have it. These three quotations, let me know in the comments what you think. But I always think that with these quotations, it can help in terms of adjusting our mindset a little bit, in terms of supporting and guiding and helping us along the way on this journey that we're on here. Okay, so what is this chart pattern that's developing on the daily chart, that is, on the daily time frame, which is predicting a price of 91,000? Well, if we go back to the Tuesday's video that I did for you, I was mentioning the pi cycle and how the pi cycle's red line is giving us a target of around 86,000. And it really fits in very nicely and provides a confluence with the pi cycle and this particular pattern to give us a very powerful move that's about to come, and we just need to be aware of it. And for those of you who didn't watch the Tuesday's video, a very quick reminder, in the first cycle, what we had was the bear market here, and then the price goes in between the red line and the green line, as you can see all along. And then when we break above the red line after the halving, this red line here, that is our signal for the beginning of the parabolic move to the top. And in this first cycle, this happened twice. As you can see here, we had another bear market. Price moved in between the green and the red line. Once we broke the red line one more time, we got a parabolic move to the end of the bull market. And this pattern repeated for the next two cycles, and we're currently in the fourth cycle. And in this second cycle, once again, once we topped off in the first cycle here, we had a bear market. The price went between the green and the red lines, as you can see here, until we broke after the halving at this red line here. Once that broke up, you could see that's the parabolic phase of the bull market. And in the last cycle, exactly the same. We had this bear market. The price moved in between the green and the red lines until the price broke one more time at the red line here, and that was the parabolic element of the bull market. And here we are one more time, the current cycle. So we've had the bear market in 2022. The Bitcoin price does exactly the same every cycle, so far anyway. The price broke above the green line. We've been oscillating above the green line here and then up to the red line, but it's after the halving that the price breaks above the red line one more time, and that price, as I mentioned on Tuesday, is $86,000. So this is virtually guaranteed if we are to get to the top of this bull market, wherever this is going to be, either at the end of 24 or during 2025. Please don't get stubborn about the dates. Bitcoin will do what Bitcoin wants to do. Our job is to make sure that we have the indicators at hand to give us the heads up of when to get out. So we can see that the price action, we're waiting for it to hit the red line. And obviously, as the price goes up, the red line will go up a little bit. So it could be 87, 88, 89, even 90 or 91. And the reason why I mention that is the current pattern that I'm seeing on the daily chart, which I wanted to show you for this particular video. So what is it? Which is providing the confluence for this particular move to the red line. So here it is. This is Bitcoin on the daily time frame. And if we remove all the other lines, we'll see quite clearly that at this neckline here, we have the makings of an inverse head and shoulders pattern. So you can call this a left shoulder, or even this one here. So we've got an extended left shoulder at this point. We have the head, and we're now in the process of forming a right shoulder. So whether this is going to be an extended shoulder or not, we don't know yet. However, it is in the early stages of forming this shoulder. It could be within the next few weeks. And you can see if it gets to about that point there, it's going to be around about the middle of June if it makes a proper shoulder here, a bit like this one here. And those of you with a keen eye will know that there is another internal head and shoulders within this pattern, which also broke to the upside, because this is what the inverse head and shoulders do. So you had this mini inverse head and shoulders, left shoulder, head, right shoulder, broke out there. Can you see with this big green Marubozu candle? So this is what we're expecting for it to break from this neckline here to the upside. And how do we measure that? That's the question. Well, in classical charting, you measure it from the bottom of the head to the neckline. And from the bottom of the head to the neckline is 27%. So this pattern should give us a 27% uplift once we break at the neckline here. And if you take it from that neckline, 27% gives us a target price of $91,000. And the beauty about this is that, as I've left the pi cycle red line on the chart here to just show you that once we get above the red line, that will be our signal for the beginning of the parabolic move for Bitcoin. So incredible confluence between the pi cycle and the patterns that are developing with the Bitcoin price action. And something else very much important to keep in mind once we do break above the red line of the pi cycle is that when we go on the monthly chart, this will give you some indication as to when the top will come, because it will come very, very quickly. So in the first cycle, as you saw, we had two tops. We broke above the red line there. After the halving, we had 1, 2, 3 monthly candles to the top of the first peak. Then when it broke again on this candle, we just had one more month before the next peak. So these can come very, very quickly. And in the second cycle here, once we broke above the red line with this candle, there were just 1, 2, 3, 4, 5, 6, 7 monthly candles that took us to the top of the bull market. And in the last cycle, this was the candle here, and that was just followed by 4 monthly candles to the top of the bull market. So we're really talking about anywhere around about between 4 and 7 months after we break above this red line here. So this is something just to keep a note of in the back of your mind. That is the time not to get off this Bitcoin train. That is the time when you buckle up, you hold fast, and just ride the roller coaster up to here. Okay, moving on to what's happening in the background with all the noise that's being created by analysts and other people who are following this crypto space. I just want to point out this particular article that there is a lot of confusion about what may well be happening with Bitcoin in terms of breaking above its previous all-time high. And this seems to play into that inverse head and shoulders because it looks like we've got a little bit of time, maybe a few more weeks yet, as many traders like here are trying to debate the next move, because so far, as they mentioned rightly, we've had about 42 days of being in the boredom zone. And if you scroll down here, very importantly, the consensus of opinion is this, that once we break through the current all-time highs of 73,000, it could reach 102,000. So that, again, is very much the thinking that we've got here. The red line of the pi cycle is at 86,000. When we hit it, it'll be a little bit higher, and it may well be at 91,000. And that will be our signal for the start of the parabolic phase. Something very interesting I wanted to show you is the total hash rate. So people ask, what is the total hash rate? Well, let's have a look for a bit of educational learning. So as you know, the Bitcoin miners are mining the Bitcoin with their advanced ASICs machines. And the Bitcoin hash rate measures how many guesses are submitted by those machines to the entire blockchain. So what this really means, in a nutshell, is that a higher hash rate indicates the need for more computing and also increased energy costs and a longer verification and transaction times. This results in a slower and more expensive Bitcoin mining. And this is one of the reasons why a lot of the smaller players within the Bitcoin mining industry after the halving have actually switched off their machines to sit on the beaches and enjoy the Bitcoins that they'd mined over the last few years. So while they've gone to the beaches to play their guitar and enjoy the rest of their life, the rest of us can analyze the implications they've left behind. If I move it to the 3 monthly chart, you'll see it much more clearer. So you can see the blue line is the hash rate and the black line is the price of Bitcoin weaving through. And this peak here, you can see, is on the 20th of April, which was at the halving. And since then, you can see that when it peaked on the halving, it's been coming down steadily to this point. And that's because the halving meant that the rewards were halved. And those inefficient miners who are now on the beaches playing their guitar and enjoying the rest of their life, they switched off their machines, which reduced the total hash rate. But what happens now here, which happens at each halving, is that the existing more efficient miners, the bigger miners, the major miners, they've started to increase their exahash in order to mine more Bitcoin to cover their costs. So the total hash rate has been rising, as you can see here, which means that with increased electricity costs, more difficulty of mining, more expensive along the way, this is going to help get all the inefficient miners out of the way. So it's really the survival of the fittest. But what I really wanted to show you with this chart is that we can use this chart as part of our Brexit indicators. We see a very interesting pattern. Just in the last two cycles, we know that the Bitcoin price topped out in December 2017 here. And look where the hash rate is and where the price is in relation to it. Then we go to the last cycle. This is where the halving was around May 2020. And you can see the hash rate rising just like it is now and the price catching up to it. And then just like the pi cycle, once it crosses over, that's when you get the parabolic move to the upside. And currently we can see that the price is now moving up around about where the hash rate is. So you can see that Bitcoin is in the starting blocks for the big push for the parabolic phase. And the fact that we're still around the hash rate with the price action, and this is where we've got to get to with this big move separating the hash rate with the price action. Same here, we've still got quite a lot of months ahead of us, so we can anticipate a big move for Bitcoin in the coming months. And it's only when this goes up by quite a substantial amount that we can expect the top of the bull market. And the Bitcoin fees chart actually confirms exactly that. When we actually had the Bitcoin fees for mining the Bitcoin peak exactly on 20th of April, since then, the actual fees have fallen drastically to around 1.2 million from around 56 million here. So that makes it more difficult for the current miners to mine the Bitcoin, and only the most efficient miners will make it. And as I mentioned on Tuesday, when we had a look at the liquidation heat map, we were looking for the price to come back down to the 67,100 in order to take out those leverage players here, and it's exactly what happened there. But we have a very strong zone here as well, around 68.5. So I'm expecting the price to go up to the 68.5 very shortly to try and take out these shorts up here. And a quick look at the Bitcoin tracker for the ETFs. A significant milestone occurred this week, and that is that the Grayscale ETF, and holding the most amount of Bitcoins at 286,000, has now been flipped by BlackRock, which has now gone above it at 289,000. So what we've had so far, and one of the reasons why the price for Bitcoin has been held back despite the big move since January 11th when they got the approval of the ETFs, despite that approval and the increase in the price, what's really been holding it back from going much further has been that the Grayscale Trust has been bleeding the Bitcoins from its initial starting point of 620,000 to its current 286,000. If we hadn't have had that, the chances are, the probability is we would have a price of Bitcoin at around 100,000 by now. But as you can see here, there is only so much more they've got to lose. And we know that the bleeding from the Grayscale has been subsiding quite substantially, while the other ETFs like BlackRock and Fidelity here, they've been increasing. So sooner or later, so with their collective power, we will see shortly, maybe if within a few months, the power of the demand powering the price of Bitcoin. And that obviously plays into the same narrative of our pi cycle at 86,000 and the target price I've given you from the inverse head and shoulders at 91,000. So it all seems to be knitting together. And if we have a look at the inflows, we can see as of yesterday, we've had 419 Bitcoin, even though Grayscale had lost 462. So we can see that the other ETFs are more than making up for the lost ground of the Grayscale Trust. And on the 7-day average of the inflows, you can see that Grayscale lost around about 2,057, whilst BlackRock actually had an inflow of 8,335. So there is a significant move to the upside going on in the background here. A quick look at the wider markets on the SPX. Somebody in the comments mentioned that the 60-day cycle that I talk about here, between these red lines, this one and this one, if you look at the dates here, 19th of April to the 17th of July, that is 3 months. Of course, these are trading days. 60-day cycles are the 60 trading days in between these. And the previous cycle you can see is exactly the same. This red line is around the 5th of January, and we finished off around the 19th of April. So it's approximately 60 trading days. So as I mentioned in Tuesday's video, we could well find support on this neckline here, after this red bearish candle that we got, and we've seen in the last 3 trading days, we've had 3 inside bar candles to this red Marubozu candle. So the momentum to the downside so far has been contained within the support line of this neckline here. So we've still got the second half of the 60-day cycle to go, and I would expect after this mid-cycle fall for it to go much higher over the next 4 weeks. And the dollar is playing to the tune of the wider markets at the moment. We've had a counter trend rally and a rejection there, another counter trend rally and a rejection there, and now we're having another counter trend rally and it's another rejection on the cards here. So there is obviously a clear direction for the dollar to the downside, and this is giving a lot of room and a lot of space for the wider markets to express themselves and let their hair down and do what they need to do to get to that end of the bull market. Moving on to gold, and we're seeing this correction as I mentioned on the Tuesday's video. We should see this coming back down to the 61.8 here before bouncing back and continuing with their bull market for the next 6 to 12 months at least. And silver is showing a little bit more bullishness. It's broken the neckline here, coming back, finding support, and now moving to the high side. We seem to be consolidating here. I wouldn't expect this to come back down to this level one more time, but if it does, it provides a good platform for it to bounce to go to the upside as well. So just keep an eye on the silver. I think it's outperforming gold at the moment. And the Bitcoin 60-day cycle, very similar to the SPX. We can see here, we went above this neckline on that inverse head and shoulders down here. We retested the 71,000 and now coming back to provide this right shoulder here and finding support on this neckline, which was resistance here. So you can see quite clearly there's a classical pattern being played out. We had the breakout, tested the previous high, coming back to find support on a previous resistance, and this is where we get off to the races. And just like the SPX, we've got the next 4 or 5 weeks for the Bitcoin price to let its hair down here. But as I said, this particular cycle, we may well just go sideways and create an extended right shoulder before we move up and break above the red line of the pi cycle. And finally, for those of you who are interested in the Bitcoin miners and what's going on in the background of Bitcoin, will be very interested to hear that there is some sort of a mergers and acquisitions going on in the background. As I showed you with the total hash rate, is becoming more and more difficult for the miners who are not as efficient. So there may well be a get-together of certain miners due to the fierce competition. This is really the survival of the fittest. And what we got a couple of days ago is that one of the major miners, Riot Platform, made a bid for another very efficient miner, Bitfarms. And this was their proposal to buy Bitfarms. And what they've done is to start off with a low ball offer of about $2.30 per share. And the Bitcoin miners is really like a chess game, and you really need to be on the faster horses with the Bitcoin miners in order to gain the benefit of the leverage play that the Bitcoin miners offer. And as a result of this particular bid, in our trading portfolio that I run with the private Bitcoin miners members that we have here at Wisdom Bites, we've moved some of the trading funds into Bitfarms in anticipation for this bid to go much higher than the $2.30. So again, we need to always be aware of the opportunities that are available, which come up from time to time. And this is on top of the ratio trades that we do in between the miners, where we move funds from one miner to the other when we anticipate one miner going above the other in terms of its share price. So these are the ratio trades that we've done so far from January 2024. And the last one we carried out was on the 13th of May. And so you can see that each of those trades produces quite a nice hefty profit. And we have our targets that whenever we meet these targets, then we do the swap between the miners and try and make these gains along the way between where we are to the end of the bull market. And that's helped our trading portfolio to grow much faster than the comparison passive portfolio that we've got. So if you're interested in following the Bitcoin miners and the opportunities with the ratio trades, as well as the bids that might be coming along the way, you can join us by clicking the join button below any of my videos, as well as in the description box below each of those videos. And for the price of a coffee per week or a bar of Snickers per day, we give you real choices here at Wisdom Bites. You can join the journey that we're all on with the Bitcoin miners and the opportunities that lie ahead with them. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, questions or suggestions, leave them in the comments below. And please go easy on the Snickers bars and the coffees. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.